So let's get into today's main story, right? Which of course is going to be Mr. Vitalik Buterin, founder of the leading smart contract blockchain, that is, of course, Ethereum, recently voiced his strong disapproval of the now infamous stock-to-flow model, which has attracted a lot of interest in the crypto space, seeing as it paints a very, very bullish future for Bitcoin, particularly following the last halving event. So first, let's quickly review the now infamous stock-to-flow model for Bitcoin, which was created in its current implementation by the anonymous quant analyst Plan B, and how it attempts to factor in Bitcoin's scarcity and production rate by miners after halving events in order to predict the asset's price, right? So the stock-to-flow model extrapolates deep into the future. It points to Bitcoin having a good chance at hitting $1 million per coin someday. So naturally, any predictions that put Bitcoin at 6 or 7 figures someday is sure to capture the imagination of investors everywhere. Now, in Plan B's latest iteration of his stock-to-flow model, which was published back on April 27th, he has removed time as a variable. And instead, he is now leaning on data collected from other assets, including gold and silver, and it is now forecasting a $288,000 Bitcoin by 2024. Or to put it another way, the stock-to-flow model is suggesting a rally in Bitcoin's price after every halving because of the supply shock in the Bitcoin marketplace. Now, the halving, of course, comes around every 4 years, and it cuts the mining reward in half for each block mined. This effectively reduces the number of new Bitcoin produced each day in half. Now, Plan B maintains that the model has closely tracked Bitcoin's performance over the years, and it also shows that Bitcoin's price has historically skyrocketed in the months following each halving event. I don't know if you guys are aware, but we are in the months following Bitcoin's latest halving event. However, Ethereum's Vitalik Buterin has not been sold on this model, and in a tweet he posted yesterday, Buterin explained why it is difficult to prove or disprove the validity of the stock-to-flow model. We'll go to Vitalik's tweet right here, where he tweets that the halvings cause BTC price rises theory is unfalsifiable, meaning cannot be proven wrong. Was the peak before the halving, then it rose in anticipation of the halving, during, because of the halving, after, because of the halving. The last $20,000 peak was near the halfway point between the 2016 and 2020 halvings. So he argues that the timing of Bitcoin price peaks makes this theory unfalsifiable. And again, case in point, Bitcoin posted its current all-time high of almost $20,000 at a halfway point between the 2016 halving and the 2020 halving. Buterin went on to further clarify why he disagrees with Plan B's stock-to-flow model, but he did acknowledge the fact that Bitcoin's price upswings not being coherently correlated to the block halvings is not enough to discredit the stock-to-flow model outright. So basically saying that, listen, even though what I'm saying is correct, this does not discredit what I am attempting to discredit with my original point. Really like the logic bombs here. So Plan B, of course, took to Twitter to fire back at Buterin's critique of the stock-to-flow model. Specifically, Plan B affirmed that Bitcoin's halving events do serve to make the digital asset scarcer, and scarce commodities like gold and silver seem to carry higher valuations than non-scarce assets. He also pointed out that the analysis should take average price levels more seriously than its peaks because some rallies are, of course, exacerbated by fear, greed, FOMO, and news. Now, it's worth noting that this is not the first time Vitalik has dismissed the stock-to-flow model. In February, he called the theory post hoc rationalized bullshit, direct quote. Now, others in the community also criticized the stock-to-flow model. Of course, many experts have claimed that stock-to-flow doesn't factor in Bitcoin's demand-side economics, which is actually the most important driver of Bitcoin's price. But currently, Bitcoin is valued, well, at least at the time of the original thought of this, right? Bitcoin's valued around 95, and the leading cryptocurrency has recovered over 150% from the March meltdown. But a monster bull rally and a breakout above $10,000 has not manifested yet. Of course, only time will tell whether Plan B's sky-high price targets do become a reality, and if speculation of a breakout to new all-time highs within the 12 to 18 months of the halving will come to pass roughly on schedule, or if Buterin and other crypto analysts have been right all along, and Bitcoin's price is not fundamentally based on its underlying stock-to-flow metrics whatsoever. Let me know what you guys think down in the comment section down below, right? Is Bitcoin's price related to its halving? Is this a thing? For me anyways, from my opinion and from the bias that I come from, my perspective, this seems fairly logical. That is the supply side economics that matter more a little bit here than the demand side economics. When you have the Bitcoin halving, you reduce the amount of available BTC to be able to be sold on the market. Therefore, price has to rise to accommodate that, assuming that there is consistent demand from the demand side. And as we can see from the institutional side and from the open interest side, that demand is there and very strong. It isn't going anywhere. So if you have consistent demand, which there has been, demand hasn't gone anywhere, and you have a reduction in supply, what is likely to happen to price? Demand overtakes supply and price moves to the upside. This raises price. So this seems fairly common sense and logical to me. As far as the stock to flow model, I feel that is extremely hypothetical, at least Plan B's implementation of it and his price targets and his analysis. Remember, it's not as if he has a monopoly on the stock to flow model. This is his personal implementation and personal model of how stock to flow should affect Bitcoin's price. There are many other possibilities of stock to flow models for Bitcoin's price on different time horizons, with different time frames, with different price targets. So it is interesting, of course, and more important to just point out the market dynamics that affect Bitcoin's price on a fundamental level, which is both supply side and demand side. But again, I think that demand side is constant. I don't think we really need to worry about that. And therefore, we look at the supply side to see supply limits, and therefore demand overtakes supply to the upside. So let me know your guys' thoughts in the comment section down below. I will attempt to pick one of the best comments and talk about it live on stream.